Hey everyone, Ron Parker here with another video in a series where I teach you from zero to hero how to become a profitable and consistent trader. I found after meeting up with numerous traders out there that there was a common theme. They didn't understand risk management. They weren't protecting their capital like their life depended on it. Instead, I found consistently that traders had nearly a 50% win rate and a 1-to-1 risk to reward ratio. So that led me to today's video. I deem it absolutely necessary for you guys to completely understand that that's not going to cut it. If you want to be consistently profitable and you are tired of the gambling approach where you have mixed success 1 month versus another and it's completely at random, I would say this video is for you. Absolutely for you. So check your stats. Are you 50-50? Are you 1-to-1 or just slightly over? That's just not enough advantage. It's not enough expected value to be trading with that approach. So let's get into today's video. I'm going to share a quick disclosure. Check out the disclosure on the screen. I'm not responsible for your trades. Of course, I'm not trying to trade for you by any means. I'm just educating traders on the proper and consistent approach that they need to succeed in this game. So without further ado, we've got trading view on the screen. So the overall theme of this video, and keep in mind, I don't have a script. I'm just speaking off the top of my tongue here to share with you the importance of risk management. Okay? And it's truly because I just see so many people out there taking something like 200 trades per day at a 50-50 win rate or lower, and their risk to reward is crap. It's a 1-to-1, 1.1. It's not going to work. And I'm surprised to see that people will stick with systems like that for years and just truly not get anywhere. So that ends today. Now, I'm going to share with you a couple different ways that you can approach risk to reward. It's one of the most important factors that separates successful traders from non-successful traders is having a well-structured trade. Two traders can take the exact same opportunity, and one trader could be wildly profitable, and the other one losing money, or just snagged so little, it wasn't even worth their risk. Okay? So I know I've got a chart on the screen here, but let me just kind of go to a blank slate so I can draw and really show you some visual examples, okay? Let's take that 50-50 trader. 50-50. Okay? That means they're legit just doing a coin flip. It's 50-50. It's completely random. There's no advantage. I think in trading, you need to be pushing the odds to something like a 70-30. Okay? So that we're not winning half the time, we're winning 70% of the time. And that's easier said than done. Holding a 70% win rate is a tall ask for a new trader. Shoot, even a 60% win rate. Okay? But that should be the goal. We can't be continuing to trade 50-50, especially at a 1-to-1 ratio. Okay, let's compare this. We got our 50-50, 50% win rate at a 1-to-1. Okay? So that means if they're risking $100 on this trade, their expected value is to make $100 at best. Okay? And if they're only right 50% of the time, that means that if you're putting 10 trades on, 5 of those 10 trades are likely losers and 5 of them are winners. You're not getting anywhere. You're not growing your account. That's simply gambling. It's a 50-50. There's no advantage. And I don't understand this. And I see that like a lot of traders, they're more like a 55% win rate and maybe a 1 point 1.5 or even a 1.2 risk to reward, but that's just not high enough to make this game easy and make your life easier. I would highly recommend traders push their win rate as high as they can. 70% maybe being the goal, like a long-term goal. Short-term could be something like 55 to 60%. But let's say in the long run, we want to push for 70%. And we don't want a 1-to-1 ratio. We want a 2-to-1 minimum. We don't take any trade less than 2-to-1, meaning not only do we have a 70% chance to win the trade, but when we win our trades, we're making something like $200. Don't need a comma there. We're making $200 and we're only risking 100. Now we're getting somewhere. The math is on your side. You need a well-structured risk to reward ratio, 2-to-1 minimum, in my opinion. I think new traders should push that to something like a 5-to-1. I think they need a ton of edge in their trades automatically. Now, how do you get a 2-to-1 ratio or even a 3-to-1 consistently? It starts with your approach. How are you taking trades? Okay? So now you kind of understand the goal. Our goal is to increase win rate. And of course, slowly but surely, I will teach you exactly how to do that. It's about stacking probability, stacking advantages, stacking well-structured opportunities with other things to increase your win rate. Okay? And of course, that comes with time. But something you can do right now today is no longer accept that I'm going to risk $100 to make 100. We are now going to, at minimum, when we risk $100, we have to take $200, no less than 2-to-1. Okay? So let me go ahead and clear this off my screen. I don't want to get rid of my higher time frame levels, so I'm going to just hit the back button a million times. So how do we do that? Let me zoom in. Let's zoom in. Let me reset my chart. We're going to go to a day that offered opportunity to take a well-structured trade. Okay. Now, of course, I have a custom indicator that's drawing all of this stuff on my screen already. So if you haven't seen the video on what me breaking down what everything is on the chart and why it's important, go check out my other videos. You'll be able to see that in my YouTube channel. Okay. But risk to reward in TradingView, you can go into the little tools and you get these brackets that you can set up. These brackets are super helpful. Okay. Now these represent a long trade buying and a short trade selling. So you use one depending on what type of trade you're taking. Okay. I'm sure some of you are familiar with this already, but the default for these brackets are a 1-to-1. Okay? It's a default. That means if you're risking one, you're making one, assuming that you're entering where the middle part is, and you drag these around to where you took the trade, right? So let's say, hypothetically, I took a short trade. I'm going short. And I entered right here at the middle of this box, at this 1-to-1 box. I need to move or adjust the brackets so that I can get a 2-to-1. So I'm going to start with my stop and move the box just slightly above the swing high right here. And obviously you'll learn to understand where to put the stop loss in time. But for the sake of this video today, just know that you start with your stop. You set your bracket where your stop loss is going to go. And then you draw the box until the risk to reward says at least 2-to-1 or higher. You can see that if I zoom in really closely here. Let me get it really big on the screen for you guys that might be on your phone or something. Do you see right here in the middle of the screen, it says 2-to-1, 2.01? Now we have an advantage. We have a 2-to-1 risk to reward ratio. When we risk $100, we're making $200. Okay? So I've got that on the screen here. And how would I use that? Well, let's say hypothetically, I entered right on that candle break where the middle white line is. Okay. Well, my stop loss is going to be at the top of this box. My take profit, where I'm getting out of the trade for at least some profits. Now, knowing me, I don't close my entire trade at the 2-to-1. Personally, I do a 2-to-1 and trail because I only trade with the trend and in the right opportunities. And that gives me more than a 2-to-1 ratio. But for sake of this video, 2-to-1 minimum. I think at the very minimum, if you're just starting out, you're a brand new trader, skip the trailing, skip anything, and keep it simple. You need a 2-to-1 or greater risk to reward consistently. I recommend a 2-to-1 so that you can have a higher win rate. It's easier to nail 2-to-1 trades, and you're limiting your risk. By limiting the amount of time you have an open order in the market, you're reducing your risk. Okay? So these two purple lines on the screen represent my stop loss and my take profit. Okay? In a well-structured trade, I'm going to set it and forget it. I do not need to manage this trade. You let your stop do the work. My stop loss will get me out of this trade. My take profit will get me out of this trade. I am not clicking the button early to buy and sell. Okay? That is something that you need to reserve for the super advanced version of you, the trader that years and years down the line, they've had so much time and practice that they understand how to get around that rule with an effective approach. Okay? But for many new traders, this is the absolute requirement. You need to stick to a ratio. It cannot be a 1-to-1. It needs to be higher. Because if you're at a 1-to-1, it's expecting you to have more than a 50% win rate. When you're at a 2-to-1 ratio, you don't necessarily have to just be 50% win rate or higher. You actually have a little bit of cushion where you can still be break even or profitable at a 50% or slightly lower. And that's the key. That's the key. You want to make it so that the game of trading doesn't require you to be perfect. We're gonna enter at the wrong times. It's gonna happen. So you need to protect your capital. Okay? So there's other things that we're going to talk about to go along with the risk to reward brackets, but you need to start using these. You need to start using the brackets. Put them on your screen, put your stop above the top of the box, and your take profit right at the bottom. And you set it and you walk away. Whatever you need to do to not click or mess with the trade. You're not letting the psychology affect a good trade. You're not going, oh, it's almost to my stop loss. I need to close it early. Save some money. No. We set it and we wait patiently for our take profit to get hit. Okay? Now, had we done a 1-to-1, could we have been right about this trade? Would we have still been profitable? Likely yes. And that's where the false sense of security might come in. Traders might think, oh, well, my 1-to-1 works most of the time, but the data, look at your trade data. The stats do not lie. We make decisions based on the stats behind our trades. You need to collect a month or more of results from your trading and look at them. In whatever broker you have or prop firm or whatever you might be trading with, go look at your stats. It doesn't lie. What's your risk to reward average? Is it a 1-to-1, a 2-to-1, a 3-to-1? What is that? And what's your win rate? Do both of those tell you that you're a high win rate trader with a high risk to reward? Are your losses kept so much smaller than your winners? Because if not, they need to be. Now, this leads me to another piece of the puzzle. I'm also seeing traders trade with brackets that set a stop loss arbitrary, like a specific number. It might be they're risking a 1-to-1. Not only are they doing that, but they're risking something like $500 to make $500. And they're not structuring the trade around what the market's telling them or what the market's doing. They're just using their brackets. And that's not going to work. Let me show you why. I'm seeing traders ignore this current high where it's a perfect place for a stop loss. And instead, traders are putting their stop loss in some fictitious number that they made up by deciding beforehand before they're trading. Like maybe they always risk 100 to make 100. And so they might leave their stop loss way the heck up here at the top, leaving them exposed to much bigger losses than needs to take place. And that's a huge problem. That's a major problem. You put your stop loss in a protected area so that if you're wrong about the trade, you're out of the trade as soon as humanly possible. In my opinion, based on experience, if we break above this white line that I drew, the trade is likely over for now. So I need to be out of the trade. It's protecting me. So do not just let your stop loss be some random number that based on your risk to reward. Your stop loss needs to go in a logical area, but behind specific and logical based on what the price action's telling you. We use market structure to guide our stop losses. Okay? So, do not be this trader where your stop loss is extraordinarily high for no reason. Bring that stop loss down to that swing. I always do just 2 cents roughly. It doesn't need to be perfect. Just slightly above the previous swing. So for me, that the swing would be this candle here, the top of this. 2 cents above the wicks. Okay? 2 cents above the wicks. And you might be wondering, well, do I calculate 2-to-1 from where I entered to where my stop loss is? Do I calculate a 2-to-1 from where the trade started to turn to where my stop loss is? And I find that to be a good question. You need to put the 2-to-1 bracket based on your entry. Wherever you entered in at, the 2-to-1 bracket has to follow your specific entry price. So if I entered right here, right on the break of this candle, then my stop loss is going to go above that swing. And only then can I adjust my take profit to make a 2-to-1. Okay? So start with your stop. Put it in a logical area for it to be protected, and also for you to get out of the trade if you're wrong about the idea. Okay? Now let's give another example of like let's say you did more than just a 2-to-1. New traders benefit from having a higher risk to reward ratio. Let's say we pushed it and we were a 3-to-1 ratio. Yes, we would have made money on this trade. Could we have made more? Yes, absolutely. Technically, from that entry, a skilled trader could have captured as much as something like roughly an 8-to-1 risk to reward ratio off of that trade. So future version of you can work up to holding your trades longer at the right times and increasing the risk to reward. Imagine your win rate when you have an 8-to-1 risk to reward ratio trade that you're taking profit on. You don't have to be right very often if you're winning 8 times your normal risk amount. And speaking of, whatever you are risking for this trade, this portion here, this risk area, needs to be consistent. And that kind of dives into the next topic. To have good risk to reward, you need a daily stop loss, something to protect your account day in and day out so you can never sabotage it. Every day before I take trades, I go in and I lock my risk settings. Now, I personally lock my risk settings in my broker based on the opportunity the day is giving me. So I, for example, will zoom out and look at the day in a broader perspective. And based on what I'm seeing, I'm then going in and setting my daily profit, not my daily profit, my daily stop allowance. How much of my capital am I going to risk? And just as a general rule of thumb, your daily budget should be something like just a few percent of your overall capital, okay? I recommend new traders starting with something like $100 to $150 budget and trading on the smallest size possible to prove consistency, to prove that their system works. And only when you know your system works and you're doing well consistently for a decent amount of time, multiple months, then and only then can we consider bringing more to risk for that day, for each day. So that might mean a new trader brings in $100, and that's the most they're willing to lose every single day based on their account size. Okay. I really like $400. That's like my absolute comfort zone. But early version of me used to bring $200 very consistently and snag a very good amount every day. So yes, $200 can go very far. It can take you very far. If your strategy is working properly, you don't need to bring a ton of money into the day. Protect your account, limit your risk. Decide what that limit is before you go and take trades, because there's nothing stopping you from self-sabotaging and going and adjusting that limit. Oh, I lost 180 of my $200. Let me go increase the amount that I have today to 400. No, you cannot do that. So protect yourself, lock your risk settings daily. It's my number one rule. Lock your risk settings daily with a predefined daily budget. Okay? So now we've walked into a trading day with a daily budget of, say, $200. Now, assuming that we're a great trader and we still only have maybe a 60-40 win rate, meaning we're a 60% win rate, we're going to lose 40% of the time. Okay? Knowing that, is it okay for us to put all $200 in one single trade every day? No, definitely not. Because 40% of your trades are going to be losses. Even a great trader is going to experience losses something like 30 to 40% of the time or more and still be wildly profitable. But the only way that that works is if they break their daily budget down so that they can be wrong about the first trade potentially and right about the second or third trade. So I would highly recommend traders break this $200 down into bite-sized pieces. I would say something like divide it by 4. You give yourself 4 opportunities to be successful today. That means a $50 risk per trade. So if we drew our little stop loss bracket here, this will be a long example, a buying example, okay? And we're risking 1 to make 2. Well, then, based on your daily budget of $200, you should be risking no more than something like $50 per trade. So, this red area that represents your risk and has your stop loss down here, that needs to say $50 or less. Okay? I always start smaller on the first trade of the day, personally. I scale in, especially if I'm starting to see major profits off of my first position. I can essentially snowball that a little bit into bigger and more profits. Just because you brought $200 to the day doesn't mean that's the maximum you can risk. Let's say I brought $200 and I won a few trades. I risked $50 to make $100. Well, then suddenly I'm not just I don't have just $200 for the day. Technically, I have $200 that I was risking and I made $200. So I have $400 of cushion. And so no, I wouldn't necessarily go risk $400 on my second trade. No, unless it's an A++ version where I need to be going heavy on it. I'm going to risk something like my standard amount, $50 on the next trade. Maybe slightly more if it's a really good opportunity. And you'll notice as I'm making more throughout the day, let's say I profit something like $500, $600, I'm not going to go bigger because I've made so much on that day. I'm going to start just tone it back. I'm going to bring it back. And let's say at $600, I'm then looking to take no more trades because I today was wildly successful, and I want to give back as little of that as possible. So it kind of works in the beginning and needs to kind of like taper off near the end of the day, where you need to be super cautious about your amount of trades that you're giving yourself to be successful. But if you are successful, then you can allow just slightly more budget. And then if you've made so much on the day, then you're cutting it down where you might sit on your hands for the rest of the day, close your charts, lock your risk settings, lock yourself out because you've already made profits. So you need to protect it. Okay? Um what else? Risk, risk, risk. Use the brackets. Super helpful. I'm watching NASDAQ today, by the way. And for those that don't know me, I have a Discord. It's got a free version where everyone can join. Everyone can check it out, see what's going on in the community, converse with other traders, and learn more concepts like this. So if you're interested, click the link. I'm sure it's going to be in the description below somewhere. Go join the Discord. If you're super interested in learning more about my process on how I structure my trades, what's my exact strategy, you even get access to my indicator, which gives you everything you see on the screen here. If I turn it off, you'll really see the chart's really plain without it. When I turn it back on, it's full of useful tools to help me succeed. Okay? Now, of course, I've got a different video that covers all the features of that indicator, so go check that out on my YouTube. But for now, consider joining the community. Surround yourself with other successful traders, other like-minded individuals that are gunning to succeed in this space. Okay? So, key takeaway, we no longer risk one to make one. At minimum, we risk one to make two. Okay? At minimum. That way we do not have to be right every single time. We do not have to be such a machine that can predict every little move and know what's going to happen next. Essentially, you're giving yourself cushion to be wrong more often and yet still be profitable. I can't tell you how many times throughout the week that I've had something like 3 losses out of 5 days, and yet I've had a wildly profitable week or even month because the other 2 days of that week were extremely profitable. So break it down. I lost 200. I'm going to draw this down. Let's draw it. We'll wrap things up with this. If I brought $200 to the day, okay, every single day, and I was wrong 3 days in a row about my trades. I followed my plan. I well structured my trades, but they just didn't work out for whatever reason. Well, I might have lost $600 assuming I locked my risk settings daily. Let me move this over so you guys can see it. Assuming I locked my risk settings daily like I should have with my number one rule, I've lost something like $600. There's 2 more trading days in the week. One good day could easily bring you $600. So I'm going to give us a checkbox for the 4th day and say plus 600. Okay? Awesome. We had 3 losing days and 1 profitable day. We're break even on the week. No, it doesn't feel great to be just break even after 4 days of work, but let me tell you, with the win rate of something like 60% or higher, the chances are that 5th day will also be profitable. Let's say we snag $500, a reasonable number for a $200 stop. Actually, this is a little high, to be honest. If you're risking $200, making $200 is also super useful. I just tend to want at least double my daily stop is my goal. If I'm bringing 200, I personally shooting for 400. I'm an overachiever. I tend to perform better than that. So this is just an example. But this week, it might have felt like I was losing, but because I had proper risk management, I walked away with $500 on that week. And that might be per account because you trade with multiple accounts. However, but just know that it can feel like you're losing, yet you can still walk away winning. You don't have to be profitable every single day. Actually, in time, you'll learn to cut out these negative days, these 3 trading days that were losses. Future version of you may have not taken any trades on day 1, so it's NA. No trades on day 2. And day 3, we took a loss because we followed our strategy. Day 3, we hit profit. Day 4, we hit profit. Okay? You don't need to catch a grade A trade every day. They're not going to come up that often. Okay? We need to be pickier. We are not taking 200 trades per day. You're taking something like 4 trades or less by breaking down your daily risk amount into bite-sized pieces. Okay? So that we can structure it so if we're wrong, if we hit our stop, we live to see another day. And ultimately, that's the number one thing is we need to stay in the game. What is the game? It's staying in the game. That's what it is. What's our job? To protect our capital like your life depends on it. So stop bringing in some insane daily budget that's 50% of your account size. Okay? Limit your daily risk. Get comfortable with that daily risk limit and use those brackets and structure yourself with at least a 2-to-1 or greater risk to reward. Okay? So I'm going to leave us with that. I hope you enjoyed today's video. If you really like the concepts I'm teaching you and you want to become a consistently profitable trader yourself, I encourage you to go check out my Discord, watch other YouTube videos that I'm sharing with you, and continue to focus on consistency. Okay? Consistency, consistency, consistency. How do we get there? Proper risk management. I hope you enjoyed today's video. I'll see you next time.